Hey guys, how are you doing today? I just wanted to jump on here and make a video about a couple of things that I think I know they're really important to me, and they mean a lot to my success. So I think it's something that if you'll pay attention to and use in your own trading routine, that it will help you too. But I'm going to talk a little bit about options, price levels, and risk management. So I don't know if, especially someone that's new with options, I don't know if you realize, you may not even know how options work, but one of the things is a lot of people don't realize is how much money you can make with them and how fast you can, and sometimes with not a whole lot of risk. There's options out there that don't cost a lot of money that you can purchase that can give you good returns, and they're good to learn with and start with. Um, I had recently done a trade. It's been a few weeks ago. I made a trade on Barrick Gold, which the ticker's GOLD, and it gives a good representation of how quickly you can make money and how much off of a option that doesn't move a lot, but just by picking the correct option, and then most importantly, where you get in the trade because you know the price levels. And so I just thought I'd share that with you guys today. So here's the option right here. It's you can see it's a gold $18.50 put, which is a put option is when you expect for the price of the stock to go down. Okay, it's direct opposite of a call option. A call option is when you think the price of the stock is going to go up. And you can see at 14.06, I paid $13 each for the contracts. So each contract is 100 shares, so that was actually $13. So you could have bought one option here and paid $13, or you could have bought 10 options here and paid $130, or 20 for 260, and so on. So these I paid 13 for, and I sold it just a little over an hour later for 25. So that's almost a 100% return out there in like an hour and 15 minutes or so. And I was just wanting to walk through this trade with you and point out a few things that I think will again help you with your success. There's the actual return on that play, and here's the play right here. First, what I do is I go through and I usually use a daily. It just kind of depends, you know. To identify a trade, a lot of times the first identifier is, you know, I usually keep everything set up on a daily chart, and then if I see something, then I may go weekly or monthly first just to see like what the trend is, the long-term trend. And then after that, then I start breaking it down in smaller prices, or I'm sorry, smaller time levels to see what's going on like within those larger levels. So I noticed this one right here, or I noticed this Barrick Gold. It'd been in kind of a downtrend, and it had gotten to after looking at it, it had gotten to a pretty important spot there. So it was a that was a that would have been what would have been now a resistance level, or I'm sorry, a support level. Sorry about that. Um, just remember this, that okay, support becomes resistance. So this stock at one time was below that line. Okay, then it got above that line. So now then if it ever comes back to that line, instead of it being resistance, it's actually support because it's already been above it. So I just wanted to throw that in, but let me show you this. So here we are right here on a 4-hour chart, and as you can see, that line is perfectly separated, and that's the same line. Like, this isn't withdrawn. I just changed the time frame. I went from a daily to a 4-hour chart, and you can see how it's perfectly split in between those two levels. Okay, that's the importance of knowing price action. and knowing those levels. And then now I've got it broke down into a 5-minute chart, and you can see that we've got a few different levels here. So I started watching the stock on this day, and you can see where it pushed up to that top resistance and failed, meaning that it didn't have enough buy action to push through that resistance. So it was denied, rejected. And then it started trading sideways for a little bit, and again that's a 5-minute chart, so each one of those ticks is 5 minutes. And you can see that it started trending down away from it. So I knew that it was weaker price action, so I immediately start looking for the floor on it. And by the floor I mean I start looking for support to see if I've got enough room between the levels to take a trade. Normally I try to get a good risk management setup to where the upside is better than the down. I've got more upside than downside, and when I don't get that confused with the direction of the stock's going, when I say upside, I just mean profit. So so right here you can see the actual time frames I've got it in, and it was 1406 and 1531, but I couldn't set those vertical lines on that because it counts by fives or whatever in this time frame. So you can see just in that hour, and you can see that also that the price didn't move that much. Okay, so I've got another. Let me see if it's the next one. Yeah, see that you can see that bell that I've got right there. 1864 is when I bought into that. Okay, so that's in 18 right at 1840 was the sale. So that's about a 24 or 25 cent move in that stock that produced a 90% return. Like, you can't do that buying the shares. Okay, that's why people buy options, because it's leveraged. And if you pick the correct option, those percentages can change very rapidly. So I just wanted to make a couple of points that, and the only reason why I'm able to do this is by charting the stock and having a pretty good understanding and idea of which way it's going to go. And I don't know if you've bought a stock, as soon as you buy it, it goes in the opposite direction. Like, as soon as you buy it, it goes the other way, or maybe just within a couple of minutes. Well, that's because you're entering in no man's land. You have to know these price levels. And then you have to have confirmation at the price levels. And if you do that, you'll start winning. If you just blindly go in, then you have no idea which way the stock's going to go. And the thing about it is you cannot trade options like that, because if you do, you will lose every dime you have, because they lose money just as fast as they win money. And if you don't know the direction that it's going to go, then you're screwed. And something else that I was wanting to say is like on these, like you want to be able to buy multiple contracts. So if you're buying an option that's more than you can afford to where you can just only buy one, I would suggest trying to find a cheaper play, because you want to be able to take profit. Like on this trade right here, I bought several contracts, and I didn't just buy one and sell it for 90%. I bought several, and I started scaling out at 30%. Just depending on how much the stock is or how much I'm having to pay for the option, what the premium is. Sometimes I start selling them at 20% or 25%. This one, I didn't have there wasn't a whole lot of risk, so I let it go up a little bit more before I started selling them off. But I start taking profit, and I'll sell some at 30%, some at 60%, some at 75%. And then what I do is I hope to have one or two left over that I can just leave in there that are pretty much they're paid for. That way, in case the stock goes crazy, then I can get a big winner out of it. But also, if that stock don't go crazy and it starts coming back down, I just don't let it go back down to nothing in hopes that it'll recover and then go back to 200% or whatever. Like, I'll sell it off also. And I mean, you've got to use stop losses. So don't this is a rule that I go by, and if you want longevity and success in this, I advise that you go by this also, and that is to never ever let a green trade go red. So if I buy an option and it gets up to 30%, and it starts coming back down, if I've got several of them, then I'll go ahead and sell a few, and then by the time I get back to break even, like I'll sell them all. And then I mean, it may be 15 minutes later or 5 days later, I can always re-enter the trade. You can always get back in, but you can't if you get in a trade, if you start, because I'm going to tell you, people get in this habit right here, and that is to get 30% up, and then a 30% win ends up being a 30% loss. And then after you do that time and time and time again, you'll blow your account up. Like you start saying, well, it's not that much, it's not that much. Well, after you do it 10 or 15 times, then your account's cut in half. So you have to take profit. Okay. And so I wanted to talk about that a little bit, and also I wanted to drive home the importance of price levels. Now, if you're new and you don't know how to chart anything, that's what I suggest you start with. And if you want to pick, I would pick 10 or 20 stocks and put them on a watch list and watch them every day and learn how to chart out the price levels. Okay, if that's something that you need help with, is charting those price levels out, you can send us your entire watch list, and we'll chart it out and send it back to you, and send like I'll write something up, letting you know what's going on at these levels and what you need to be looking for, and all that, if that'll help you out. There's a link in the bio you can click on to set that up. And then if you have any questions about anything else, you can put that in the comments, and then we'll try to do a video to answer your questions. You just make sure that you subscribe to the channel. That way that you'll be able to see the answers or whatnot. And then also we're going to be doing, again, like I said, we're going to start breaking options trading down into a lot finely detailed, and also price levels. So if you think that we can help you out, just let us know. Thanks.